public markets have been shrinking. Can you just give us a sense of how much we have seen the public world contract?
Well, it's dramatic here, Lisa, and obviously I'm right here in the heart of it in San Francisco, where companies stay private for longer. And what that has meant is that essentially over the last 2 decades, about half of the public companies have gone away. They're not publicly traded anymore, and that has been a boon, obviously, here, companies staying private for longer, but it has real life implications for lots of investors.
All right, so can we get a sense of why so many companies are deciding against going public, why they're sticking with private financing?
Well, mainly because the money is absolutely available. You know, here in Silicon Valley, we talk a lot about venture capital, obviously, but private equity, we're talking about $4+ trillion of assets under management when you think about private equity writ large, including venture capital. So the money's there. The likes of Uber and Lyft and all the companies, you know, all these unicorns that sort of roam around this part of the country, they can get money. They don't need to go public.
Jason, you make a really interesting picture of San Francisco with all these unicorns just wandering around looking for financing. But I'm wondering,
they're everywhere. You can ride them.
You can ride unicorns. I'll look for that picture of you riding unicorns. I'm curious, though, do we ever see this trend changing and companies deciding to go back to IPOing and going to public markets?
Well, certainly those of us who were around for the dot-com bust back in 2000 remember that the money did dry up a little bit, and you know, things can change for sure. But it does feel like, and you cover this on your show all the time, you and I talk about it a lot on the desk, the money has shifted, the market has shifted. It feels more secular than cyclical, as they say. Private markets certainly here to stay. The question is, can investors get the type of liquidity that they need to really trade in and out of these names in the way that they can on the public market?
All right, Jason, have so much fun riding those unicorns. It does bring us to the companies that do decide to go public. And Sonali, there are companies still hoping to rely on IPOs next year for financing. What are some of those names?
So some of the biggest companies that we're looking forward to is Airbnb, which has been pretty vocal about their hopes of going public, and they do tend to turn a profit. So we'll watch for how they do it.
Which is rare.
Yes.
Among some of them.
Exactly.
But carry on, yes.
It is not definitely something that's unanimous among unicorn worlds. So Airbnb is one of the hopefuls for 2020. And then we also have Doordash, which is not profitable, SoftBank backed. It's going to be a really interesting ride. There's a lot of skepticism baked into the Doordash story also.
Given how much money there is in private markets, why are they going public?
Well, people still like to have liquidity for their employees as well as their existing investors.
Employees like the founders, for example?
Right, and the hope here is exactly the founders especially, but also the other employees. And there is a hope that going public will help you grow faster, give you a more diversified base of shareholders, give you a longer lifeline. Remember, look at the top 4 big tech companies. Look at the FANGs. It still gives you a rite of passage into kind of being a grown-up company. And so those with the hope of longevity would still like to use the path.
All right, so there are going to be some IPOs. Meanwhile, let's turn to luxury real estate, which has been a rough spot this year around the world, sort of. I mean, slightly rough. Some people are growing a little bit more optimistic, though, next year. Patrick, can you give a sense, first of all, when I came in, I said to you, so how bad has it been? And you're like, it's fine.
It's not that bad for me.
Oh, well, but it's how big have the declines been in some of these property markets?
Well, you know, it goes market by market. You definitely do have cities like New York, you have Manhattan, where there has been large influx of new supply, and so there's too many high-end apartments on the market. So sellers haven't been able to get the prices that they've wanted. You've had taxes and other government efforts in places like London or Vancouver to sort of cool off markets, to make it harder or more expensive for foreign buyers, and all of that has had a toll this year.
All right, a toll, although you seem like you're playing the smallest violin that I could ever see. What about next year? What are we expecting?
I think the pendulum is going to swing back a little bit, at least, again, in certain places, particularly where there's been less new inventory coming onto the market. Places where maybe, you know, you could look at London where the political situation looks a little more clear. Maybe people have more confidence in investing in real estate there. You have cities like Miami where, you know, the U.S. tax policy is kind of pushing wealthy home buyers to take up residence in Florida where they don't have to pay income tax. And so that could be a boon. Again, that's a market where the supply-demand sort of balance is a little bit better for sellers.